Okay, here is our broader market update. We'll start with the S&P, and we'll probably just we'll try to look at the other indices if we get a chance. Um, and so we talked about the fact, and as always, take a look at the links in the description. You can see the previous video. That was actually just from yesterday. I wanted to give an update ahead of the FOMC meeting, which we had today, September 21st. Right now it's about 9 p.m., so the day is behind us. And let's talk about what happened. It was very eventful. We knew it would be. We knew this was going to be a big catalyst, just like the CPI was last week, right? And so let's zoom in here. So this is our daily chart. This big red candle was our CPI day. Bad news. We had follow through consolidate, like we had follow through to the downside, but then we had this swing low, right? It was like, oh, wait a second, maybe this is actually our daily cycle low and not this. But then we've gotten more downside. And I talked about this on Twitter. There are two ways to look at this. You could say this is not your daily cycle high on day 4, and this is actually trying to roll over into a new daily cycle low. There's still time for that to be the case, but as of right now, what it would seem like is this is actually day 11, and our daily cycle high was on day 4. That's a really bad sign because, your daily cycles are usually at least 20 days. So if we assume we get just a 20-day cycle, which isn't even that long, we'll drop into the early October. And we talked about this in the video last night, that, which path would price take. It clearly chose its path. And again, I hope this is now much more clear to you, that you're starting to see these everywhere. This is a bearish outside candle. Why is that? Because it made a high relative to the previous candle, right? You can see that wick, and then it also made a new low, and now it's red. So that's a bearish outside candle. Really bad sign. It just creates another swing high that we need to get above. And again, if this is day 11, that means a lot more downside. And I do want to clarify that even if we do get a daily cycle low, it's not a guarantee that it's going to be bullish. I mean, look at this. You could get a nice, strong daily swing low and even get follow through and then have things collapse. In this case, it was because of the CPI number. And I have this labeled here, October 12th. This is probably your next, or I should say this is going to be your next CPI release. They're released every month. Somewhere between the, 11th, 12th, 13th, depending on what day of the week that falls on. And so you imagine that's going to be a next big catalyst. Maybe that's actually our daily cycle low, right? Because we talked about a 20-day cycle would take us to about October 3rd. So maybe we get something like a 25-day cycle that takes us to, the 13th. We'll have to see. But I mean, this is a really bad sign. And if you look at the weekly chart, as we talked about in our weekly report, so after we got this swing high, right, the weekly report that I posted after the swing high, we thought we were in a daily cycle decline. And then we got this follow through. We were like, okay, it definitely looks like we're getting that. And then we got this bullish outside weekly candle, which is like, oh, well, that's interesting. Let's see what we get next week. We got a new high, and then we got a bearish outside candle, and now we're getting follow through. It just confirms our suspicions from this first swing high. And now we find ourselves on week 14. It's a question of, is this going to be a failed weekly cycle, which means we go below this low? Given it's only week 14, it seems like we have time. But it's also not super early in the weekly cycle. Remember, the previous one actually ended on week 16. So you do want to be careful not overextending, not expecting an overextension to the downside, if you will. And if we look at the monthly chart again, just everything is just not looking good. We're just sinking deeper and deeper. We're now about to test the low from July, and then the only low left after that is the one from June, which means we'd make new lows for the year, and we'd officially continue the monthly downtrend. Because right now what we have is a lower high. And what usually follows a lower high in a downtrend is a lower low. And so that's what we would expect next. So let's quickly look at QQQ and IWM because they were diverging a little bit. QQQ hadn't made a new low yesterday, but then it did. So 4, 5, 6, 7, 8, 9, 10, 11. So same count as the S&P. Today with the FOMC, it just wasn't strong enough to resist. And we got basically the same chart, right? A big bearish outside candle. So that's your daily, and same count on the weekly, week 14. Again, remembering we did, so in the case of the Qs, it actually bottomed on week 13. So it was even short. So the S&P had a really short cycle at 16 weeks, that's really short. The Qs had an even shorter cycle at 13 weeks. So you have to be ready for this kind of thing, right? Sometimes you get a bit of a washout and it's like, okay, maybe we're going to get a little bit more of a rally for a few weeks. So again, just listen to the price action. Don't get too biased is what, as I guess is what would be my advice. Or I should say this is not financial advice. That's what I'm going to do. And on the long-term chart, we are in month 30. If we expect it's a 36-month, cycle because it's 3 years, that's easy math, right? It tells you we've got another 5 or 6 months of downside. These things don't have to end exactly on the dime, obviously, but more importantly, we're clearly well below last month's low, and we're deeply red. So it's just not good news. Like, very, very basic price action. And finally, IWM. Also, again, identical chart, bearish outside candle, week 14 making new lows. And this is something that we talked about in the previous videos. Again, obviously, we had the FOMC washout today, but for a little while, IWM was actually holding green. It was outperforming the other indices. The monthly candle was holding green. And we talked about the fact that it's probably going to get dragged down by the other the other indices. And so the opening price, we're probably going to go red. And so you could use the opening price as like your minimum downside target. And so we obviously got well below that now. And so that's always a good way to kind of think about these things as well, is that sometimes something that's holding up like strong is probably going to cave. And so that's actually your opportunity to, kind of pick on something that hasn't been beaten down yet. So that's the lay of the land there. We'll see. There's still hope. I guess let's look at the futures just really quickly, and you can see the futures are already making new low. We're already getting bearish follow through on this daily candle. So this gives you a little bit of a picture of what's to come. You'd expect your next support area around the 3,700 level. Now remember, the futures are just a little bit different in terms of the prices. I think there's a 15 to 18 point spread right now. So the numbers won't correspond exactly, but that's what you would kind of expect. Again, at some point we're going to get a bounce because this is a pretty big extension lower. It's just a question of, is it going to be a lower high? And I suspect it will be. That'll be another opportunity to short if you are so aggressive. So that's the lay of the land there.